The stablecoin market is booming, now valued at over $300 billion and handling trillions in transactions yearly. As stablecoins reshape the payment landscape, new questions emerge around their impact on the traditional systems, regulatory changes, and industry consolidation. We spoke with Subbu Jois to get these insights on this development and what lies ahead for the stablecoins and the digital finance. Subbu, welcome on 3.0 TV.
Thank you. Thanks for
this
interview.
Absolutely. So, first of all, happy Diwali to you and your family. So, since we are talking about stable coins and the market now has exceeded $3 billion and which is facilitating over 27.6 trillion in dollars in the annual transaction volume. And do you believe stable coins are beginning to pose a seismic challenge, or traditional payments rails like the Visa and the Mastercards are in big concern? What's your opening remarks on this?
Yeah, see, since January this year, when President Trump announced on the stablecoin scenario, the market has been growing phenomenally, and I think this year it's averaging over 25% growth already. I understand that over $15 billion is the daily average transaction size on just stable coins that consists of USDT, USDC, primarily, which is 90% of the market share, and Ethena, which may be a bit behind in third place. Now, at $15 billion, it is already almost 5x of what Bitcoin trade has been.
Fantastic.
On a daily basis. Mm-hmm. Okay. Now, in that sense, it has already overtaken cryptocurrency trade on transactions on a daily basis. Mm-hmm. Given that it is offering immediate settlement and almost very negligible transaction fee, there is going to be as you rightly said, a seismic change in the way that international business and cross-border transactions will work, and it's already working and may soon accelerate even more. And we may soon see in the very near future some the stablecoin trade exceeding even SWIFT if all goes well. Now, that is the type of potential we're talking of, and that's the type of volumes we're talking of, especially for cross-border transactions.
Fantastic. And since we are also seeing a wave of consolidation, Subbu, you mentioned about the cross-border transactions trading, it can exceed, but the Ripple has acquired Rail, Stripe buying Bridge, and Coinbase and Mastercard bidding for the BVNK. So how do you interpret this M&A trend in this stablecoin segment? Is it about infrastructure control, regulatory arbitrage, or strategic access to the new markets? What's your opinion, Subbu?
I think strategic access will play a large role, followed by regulatory and compliance requirements in different countries. Each country has got their own perspective on this, and I think countries which are laggards in this will soon suffer from international trade if they do not make strategic moves on adoption of this technology at a very rapid pace. Countries like India and China will obviously, where there's a lot of export-driven economy that is in these two countries, among other countries like Indonesia and Vietnam. They would have to adopt these technologies very, very rapidly in order to not lose market share.
All right, you spoke about India and China, and the recently passed Genius Act in the US and MiCA in the EU are pushing for the stricter oversights and full 1:1 reserve, as we all are aware. So how do you see this regulatory clarity impacting innovation? Does it accelerate institutional adoption, or could it, separate the smaller players and the new entrants?
It will obviously, with Genius Act and MiCA, we will definitely see at least the two major markets, which is US and Europe, enforcing stricter controls, and they would want to see the imports coming into their jurisdictions to be well regulated. Obviously, the KYC, AML, and counterterrorism tracking and things like that are critical for global economy, and they would definitely enforce a lot of these measures in full scale. Smaller economies or laggards in this case, unfortunately, while India has been talking a lot about it, we need to see more quicker response from the government and faster implementation of acts so that adoption doesn't miss the international timelines and we don't miss the bus in this case.
Since you spoke about India and missing the bus, sort of, but you also spoke about 90% of the total market share is with the Tether and the USDC. Let's break it. Yeah, let's break it down. Tether still dominates with 65% market share, but USDC is slowly gaining ground and PYUSD is surging. So what do you think will define the next generation of winners in the stablecoin space? Reserve, transparency, chain interoperability. Since you work on the heavily on the tech side and institutional partnerships or something else, Subbu, what is your opinion on this?
See, as the international trade grows, we will need to adopt to faster technologies which have higher throughput and lower latency to deliver this. Current blockchain infrastructure will have to evolve into something much more advanced, which can handle that type of throughput and transactions and deliver the promises of stablecoin.
All right. So, Subbu, we spoke about India, we spoke about China, MiCA, US, and the other part of the emerging economies. But given Asia's proactive stance with new regime in Singapore, Hong Kong and Japan, do you think that the center of gravity for the stablecoin innovation and the adoption is shifting eastward? And how should Western firms respond to this regulatory competitiveness rather?
It will always have this issue of first mover advantage and early adopters. Early adopters have to move fast so that they don't miss the bus or lose market share. It's very important that early adopters, like the Asian markets, which currently are a bit behind. I think Asian markets will have to move quickly on in this case.
Moving on, Circle has recently launched the ARC blockchain, and the Ripple's introduction of the RLUSD suggests a pivot towards custom infrastructure. Since we're talking about broad-based stablecoin adoption and the countries who are working on it, and this is specific to the blockchain layer ones who are actually taking the lead in it. Do you believe the future of stablecoin lies in vertical integration, owning the chain, the stablecoin and the payment rails from here on, or will the interoperability remain the key? What's your view on this?
I think interoperability will be key because each sovereign nation would want to have their own the stablecoin and not be tagged to any single currency. And in such cases, you will see a large number of stable coins coming from different jurisdictions, which if international trade and cross-border trade has to grow on this, interoperability will be key.
Fantastic. And one last question, Subbu. The ECB has voiced concerns about the USD dominance in stablecoins. And with MiCA in place, is now the right time for the Europec stablecoins to emerge at scale? And what challenges do you see in achieving adoption of the non-USD stablecoins in the global market? And Trump साहब के पास भी अपना खुद का stablecoin है. तो चित भी हमारी, पट भी हमारी, and everything is ours.
So the X factor here is obviously Trump. Because no one is able to read his mind, and therefore defining policy is a bit of a challenge. In those circumstances, Europe will have to evolve something that works for them and will evolve over a period of time for them. So obviously there'll have to be a euro-denominated stablecoin somewhere, which will be working within and outside Europe and for trade with you. Likewise, India, China, and all the other major economies, including Japan, will have to come up with their own stacks and technologies, which is backed by their fiat currency to ensure that the stablecoin market grows. So regulatory evolution is a requirement and will have to happen over a period of time. But we'll have to do it
very quickly. That's the word coming in from Mr. Subbu Jois. Thank you so much, Chief, for being part of this special stablecoin discussion. And I wish you all the best for your future projects going forward from here on. Thank you, Subbu. It was a pleasure having you on 3.0 TV. Thank you.
Pleasure. And happy Diwali to all your viewers.
Thank you so much, sir. Thank you.